top and bottom line, they look pretty good to me, Geetha. How'd you see it?
They look very, very good, Romaine. And I think the one big thing that, we were looking for was guidance in terms of operating margin. So obviously they raised their guidance for 2024 from 26% operating margin. That was already a 500 basis point increase from the previous year. They raised it now to 27%. But I think what was a little bit disappointing is we're only going to see, they're targeting only about 28% in 2025. So obviously it looks like we've kind of pulled forward some of that operating margin expansion. So that I think is going to be a key focal point going forward. I mean, I'm not sure if they're just being conservative or how to map this out. But I think one thing that, investors were really looking for and didn't get was the announcement on price increases, because now there's less clarity, as you pointed out, into the revenue growth trajectory.
Does that mean it's not going to happen anytime soon, or is this something that in the past they've announced during the earnings call and didn't include in the actual letter to shareholders?
I'm not sure whether they're going to announce it on the earnings call. They're probably working through some more of the different things. I mean, we kind of have to look at the whole change in the narrative now for Netflix. They are going to stop reporting subscribers. So this is going to go from, a subscriber story to a top line story. And as you, pointed out in the segment before, advertising is obviously going to be a big part of that. And how big the advertising portion gets is definitely dependent on how much they are going to raise prices. If they're going to price people out, if they're going to raise the standard plan price from, let's say, $15.50 to $20, that means they're going to drive more people to that ad-based tier. So it's going to be interesting to see how they want to play this. You also pointed out that they have huge pieces of programming coming on in the fourth quarter, all of which play really well to that advertising base. So again, it's probably just a timing issue.
That's a good point. I do want to get your thoughts here on the cost side of the business. When we talk about revenue, the cost of those revenues, at least about 50%, more than 50% of the actual top line number. I know that's been pretty consistent for this company. But when you talk about the amount of content that they have to produce and the amount that they have to pay, Geetha, are you comfortable with that spend?
I definitely have seen a huge, and this has been across the board, Romaine. There has been this huge content cost rationalization, and definitely it's the same for Netflix. We're seeing them take a much more balanced approach towards kind of green-lighting new shows. We're also seeing them kind of really expand their catalog, going into different genres, some of which has happened to be much more cost-effective, apart from, of course, the local language programming. But again, we are going to have to see what happens in 2025. As they try to build out this advertising business, do they have to go after more expensive sports content? And that, of course, then can, skew that equation a little bit.
Geetha, everyone's so fixated on the number of subscribers added to the advertising tier in the U.S. and Canada, but they're not providing us those details. Why do you think that's the case? They just want it to stabilize more. They're still building out the strategy. I mean, at some point, especially as they start to not tell us their actual subscriber numbers, they're going to have to give more details.
They are going to have to give more details, but I really think they're looking to build a critical mass here, Scarlett. So they did give us some, scattered data points. We know they have well over 40 million monthly active users. Now, the typical math there is, it's two viewers or two monthly active users equals one subscription. So, people have guesstimated they probably have anywhere from about 19 to 20 million, ad-based subscribers. Again, I think they're playing this very, very carefully. Remember, there are a lot of things that are happening here. They're beefing up their programming to make it more attractive to advertisers. They're also kind of re-engineering their whole ad tech strategy. So they're building their own in-house ad tech, and they're also opening up to third-party partnerships, whether it's with the Trade Desk, whether it's with Google. So that makes more of their inventory available in the marketplace. And they're doing that in conjunction with kind of really ramping up ad revenue. So I think they're looking to build a critical mass before they actually start reporting numbers.